This is your LMAX Exchange technical update for Thursday, January 5th, 2017. Euro dollar. So setbacks in the euro have stalled out thus far ahead of that 2003 base at 103.36, but overall the market is trading at these multi-year 14-year lows and is expected to continue lower towards next critical support at parity. At this point, if we do see any rallies, they should be very well capped ahead of 108.75 with only a break back above that level to compromise the bearish outlook. Sterling dollar. So cable has been supported right now in the 122 area, but overall here the pressure still remains on the downside, and while the market holds below that previous base at 127.96, the pressure will continue to remain on the downside with a lower top set out ahead of the next downside extension, potentially towards a retest of that plus 30-year low from October down at 1840. Dollar yen. So dollar yen has seen some intense gains over the past several weeks, with the market resulting in a price at a rally all the way up towards 118.67 thus far, and the market now has been locked in a consolidation but should continue higher through 118.67 and towards next key barriers at 120 further up. There is some short-term support now which comes in around 116.04, and a break below that level would set the stage for a minor correction and open the door potentially for a move back into the, let's say, 114 to 115 area from where that next higher low is sought out ahead of a bullish resumption. Euro Swiss. Euro Swiss continues to be pressured overall to the downside, and the market is focused on a retest of the 2016 low at 106.24. Any rally should be very well capped with only a break back above 109 to compromise the bearish outlook. Aussie dollar. So Aussie has seen a nice bounce after stalling just shy of key medium-term support at 71.45, but overall here the pressure remains on the downside, and if we do see additional corrective upside, it should be limited to the 74 area where a fresh lower top is sought out ahead of a bearish resumption. Dollar CAD. So dollar CAD has seen an impressive pullback from the recent highs that we saw at 35.99, but overall here the uptrend remains firmly intact, and while the market holds below that previous higher low at 30.81, there is risk for another higher low somewhere ahead of there in favor of that next upside extension beyond 35.99 and towards 140 further up. Kiwi dollar. So Kiwi is stalled out to the downside thus far, but overall the market looks like it's putting in a major top, and as such any rallies here should be very well capped up and ahead of 72 in favor of that next downside extension towards medium-term support at 66.76. SPX 500. The S&P 500 continues to trade just off record highs, with dips being very well supported, and there is risk for a push to fresh record highs beyond the 2280 high and towards the 2300 area further up. At this point, we would need to see a breakback below recent support, which comes in around 2232, to take the immediate pressure off the top side. Gold. So gold has seen an impressive recovery over the past several days after being supported by some critical Fibonacci support in the form of a 78.6 Fib retracement off of a major move around the 1120 area, and this sets the stage for a more significant bounce and potentially suggests that the market could be putting in a longer term base off those lows that we saw back in 2015. At this point, if we do see a daily close above 1170, it will strengthen this outlook and open the door for an acceleration back above 1200.